Hello, friends of Komodo platform. Hello, pirates, friends of Pirate Chain. This one's for you. I've got some video here to share, well, a screen to share with price charts, and it's being created into a video. I'm E. Giuliano. It is a Sunday. It is a Sunday, 21st of November, and I'm going to share the screen now and talk about the Pirate Chain price chart against BTC. Yes, I already went over these ideas in brief. I would like to speak more in detail about this idea of this potential double zigzag. What are we talking about? Well, in a neo wave fashion, okay, of Elliott wave theory type of thinking. That's where we're going to take this from. How to start here? Well, basically, this idea of a double zigzag, a triple zigzag, they are forms of a complex correction, not a standard pattern. Like a zigzag like this, ABC, or an impulse, you know, like the 1, 2, 3, 4, 5 variety, and then the correction. Those are standard patterns. A flat pattern, A, B, C, is a standard correction, and a triangle, A, B, C, D, E, is a standard pattern, whether it's contracting, and then, you know, you might get into expanding. So those are standard type of patterns, and then you can combine them to create more complex patterns. In fact, the simple mono waves that create a polywave pattern, the simple pattern, they can be then more complex by having their subdivisions with, like, for example, 5, 3, and 5. Okay, so they become more complex. However, there are these are still considered standard, even when they're a bit more complex. Okay, non-standard, we get combinations, including X waves, and that's where you start combining ideas into bigger non-standard formations. And so that's the idea here. A double zigzag would be a non-standard formation where you can legitimately link a couple zigzags together with an intervening X wave and making a bigger corrective pattern in this case here. So this is the Pirate Chain price chart against BTC. And Glenn Neely here, I've quoted as saying the double from the Mastering Elliott Wave book, the double or triple zigzag, unlike any other Elliott pattern, can provide an ideal channeling environment. Two parallel lines should contain the entire series of multiple advances and declines. So in that case, I am going to consider this here a bit more carefully. But what's happening? What does that come from? That comes from this touch point rule. The touch point rule basically says that a perfect, let's just fix that. Hello, perfect channelable, you know, zigzag should not be the end of the corrective pattern, meaning, okay, there's these touch points. When you start using trend lines, when we use the trend lines, they're based on significant touch points. And if the zigzag pattern ends, or even a flat pattern, whatever, but if the zigzag pattern ends here at the touch point, it means there would probably be an X wave intervening and then some further movement that takes us either out of the channel, within the channel, probably within the channel. Based on this idea here, it would stay within the channel. And that's why I've got these white lines here, trend lines, rather, and also the pink, because the white ones relate to here, which has a bit more of, how do you say, leeway, where it just says diagonal trend lines. help us decide where a pattern inflects and ends. So you also, again, don't, where the significant trend line touches occur. Well, and then now this is where this type of discussion comes into play. We'll be there. Where those occur are significant inflections. And then the ending is meant to not be as like an inflection point at the channel. Instead, it should end, inside the channel, or, well, yeah, generally based on this idea, it should be in the channel, but we'll see what we can work with. But then the diagonal channels allow it to be not having to be a parallel line channeling. Okay, does that make sense? So here we go. I mean, what does this really matter? Well, it helps us to potentially see where we might go next, and on a bigger level, on a bigger degree. Maybe it's the same degree as this zigzag. Where are we going? And then also it gives us an idea, a double zigzag, maybe corrective pattern. Where are we going on a bigger degree scale that includes both the impulse up and the corrective pattern down? So, but having said that, this also means that it helps us to say, well, there's a good chance that this is bottoming of this move on a significant level, and this is our BTC. So that means there's a chance that in time, like, doesn't mean it has to go up right away hard. Maybe it finds some action first down below and then goes. I don't know what we're going to look like. However, sooner in terms of coming up a certain distance is yes, and so that gives us this kind of window here. Okay, and then and that takes us again to this theory of time, which leads to the 2022 first half of the year. And then there is also, we'll look at the Fibonacci extension of time in a moment after everything else. Okay, so that sets it up basically. Touch point rule relating to these ideas. This is looking like a double zigzag. A quote from Neely about channeling and about how double zigzags are very ideal for channeling. And then this important nuance about diagonal channel lines to help us determine the inflections and the endings. Okay, and along with this diagonal channel line, there's this idea of the B2B trend line. It depends on time. If the B wave takes longer, then it'll be a B wave B2B trend line. And if the X wave takes longer, then it would be a 0 to X trend line. Okay, so, and this is considered, I guess, to consider the base trend line because it's the one to be broken to change the trend. Because if it's a down sloping, then it trends, the base needs to be broken to the upside. And if it's an uptrending channel like this, then this would be your A. Oops, this would be your A. This would be your B, and this would be your C in this case. And so what was the point here? The B to B, that's right. So it would be on the bottom, and we would be looking to break the trend to the downside. So anyway, okay. Now, having said that, where do we go next? We go to this B2B trend line. So we're going to try and figure out where actually is the B2B trend line. Also, this X wave. There was a question for a moment for me, and that's why this horizontal line is here, because there's a possibility that maybe there's a missing X wave here. Okay. So let's go to this, talk about that now. Let's talk about this double zigzag itself. Okay. Let me get this. Let's go deeper in. Okay. So hope you can see well enough. I'm gonna just hide this one right here, okay? And I'm gonna hide this one right here, and I'm gonna hide this one right here. Now, this generally looks like the ABC because the A this is the direction of the trend, so it's more impulsive. B can take longer time, and it's kind of going up, but it's also it's taking longer. And not only that, it's, yeah, so the up direction is actually corrective. It takes longer to get there. Impulsive is down. So then C is more impulsive. So that gives that shape, okay? Now the potential was that there's an X wave right here, okay? And that also was held up by some Fibonacci's. Like at this current way of counting it, ABC was about 1618, and that's really solid, okay? So I like that actually really nicely. And then here it's like, well, but where's the B? And so then maybe there was a hidden X wave here, and then you get an A, and this is a B. And then in fact, what ended up happening was maybe this is the B here, because, so here, let's talk about it like this. Let's talk Elliott wave counting and the trend lines. So maybe we're saying that, I'm actually gonna get rid of you in this format. I'm gonna add you in this format. X, okay, that's my X, okay? And that way I can just move it at once. And oops, I am looking to, there we go. Yeah, so that's the potential X wave right here. Okay, oops, delete that. Yeah, so there would be a potential X wave, and then you get your A, and then a B here, and a C, because here it could be actually a flat pattern because of this retracement. Like if we were in a lower scale, this would be your A, your B, and your C. And because your B wave, let's take that to a lower scale just for fun here. Because your B wave is longer than your A wave, you know, it's already showing strength to go in this direction. And then the C wave, it continues that, but it's still within that move, and it retraces decently. Like when we do, you know, we retrace the A wave with the B wave, and we say, okay, it didn't go 1382, but it's over the 1. So it is a strong B wave for sure. And then this B wave gets retraced by about 50%, which is decent, okay? But also on top of that, the let's see, comparing the A wave and the C wave, it's roughly 61.8%, the C wave to the A wave. Like that's a pretty good call right there. So in that sense, like maybe this is the B wave, and there was this missing X wave here, and because then you have the Fibonacci extension from the A, because we would change it. This would be the new beginning of C, and it would be itself kind of between 1 and 1618 as the finishing levels. And it allows this part to be really like impulsive here. That's good. That's a good impulsive move compared to this sideways correction, and it allows for that. So that's the reason why I would think maybe that's where this ends. And so then instead, okay, you see how that became the B wave, right? So then it would have made this go here, this. Okay. So that would do that, okay? And so then I'm like, okay, maybe, and does it really matter? No, but let's have some fun and play around. And maybe, yeah, it does matter. I don't know. I don't, again, none of this financial advice. I don't know exactly what I'm saying here, but based on what I'm learning and what seems to be happening, and what I'm interpreting, oops. So what I'm saying then is take it to the daily price level to see, like, okay, what would that missing X wave have been? What action would it have been? And can it tie into this? And then you start to see, like, the cool thing about these patterns is they change their what they are on different time frames. It's just pretty cool how the increase of the waves and the data points changes what the waves are. Like this here, this This potential C wave, what we had before as our C wave, because this before was the C, what we had as that C wave is it's much more like a channel. Remember what he was saying about channels is that corrective patterns, they just follow within the channel. An impulse moves out of the channel. So in this case, this is a complex corrective pattern, not an impulsive 5-wave move, according to Neely method. So in that sense, it's like on different levels, they equal different things. However, I bet somehow this allows for it to be the C wave of this move, and it becomes an impulsive move. Again, when we take it to a higher level. So what would be the idea? Maybe too is that just this part right here would have been, and let's start changing that again, would have been the impulsive move where you had, let's say, this 1, 2, 3, 4, but there's no alternation there, which I don't like, and 5, but whatever. It's not like who am I to call things. So maybe that would have been the impulse after a flat pattern. You know, like zigzag, X wave, flat pattern with the C wave down here, and then this X move here, and then now you get an A and a B, and then C or whatever you're coming for next in terms of your corrective patterns. So okay, that's possible, X wave there. However, when we take, oh, and by the way, just for future talk, the next move is likely to be fighting around here, you know? Maybe it's not here, maybe it's here, whatever it is, but it could even be, you know, up in here. In fact, I wouldn't be surprised if it is, if we're like 5,000 Satoshis by beginning of December, and then, you know, then maybe it continues back down to confirm this bottom as, you know, Bitcoin ramps up, because it's this is the BTC price chart. So that's also likely, who knows? And then maybe the price goes up higher after that, breaking this downtrend line, which was previously support and is now resistance. So I would say it's a very important trend line and probably will come into play at least one more time as resistance to then confirm breaking it out. Okay, so, but then it comes back to this idea of trend lines which are called channeling in the Neely method. So we're going to move back to the weekly, okay, and say, all right, well, it doesn't really matter where the X wave is, but there's some way which is going to make it more reasonable. And if we look at this extension here, it's still good. It's like 1-to-1. That's what made me say, okay, it could be. It could be this is your zigzag 1-to-1, and then your next one is here, and it's like, okay, A, B, C. Here's your B, and okay, fine, possible. Either way, we're looking like we've got a couple ways to count the double zigzag, but then we start taking into account the channels. Well, interestingly, this end of a B wave here allows the channel to have a B to B trend line, but the problem is that the two parallel trend lines don't end up containing the entire series, probably. We'll see. Let's take a look. So that would be this trend line here, right? What just happened? Oh, I want to touch that. Boom. What? No, that's not what I want to touch. This is what I want to touch. Okay. So if we look there, we have the B and we have the B. We have a B to B trend line here. Okay. But that means, and we also, you know, we relatively do okay. We can play around with this A to A here, but it's really more about this B to B trend line. Oh, sorry. Yeah, because then this would see, and that's why this becomes that C, because this goes back to this rule here, this touch point rule, and the idea that if it is the C, and then the next thing would most likely be an X wave in a more complex non-standard formation. So what ends up happening is we get this idea of like, and I'm sorry, it's not perfect here. Let me just do it again. get this idea. Let's do B to B. Okay, can you please take this longer? B to B, come on, whatever. So you get a little bit out of there. Oops, whatever, it's rough. It's roughly there. So we could, yeah, it doesn't really work perfectly per se. All right, but let's imagine though that we take into account the idea that this touch point could very well likely be the C wave, and then the next wave would be an X wave, which doesn't retrace this pattern by 61.8. So if if an X wave would not retrace by 61.8%, definitely does not. And yeah, so that's why I actually start to say, okay, maybe this is where the X wave lays, because then because here's your B to B trend line, but we start coming out of it, and which is possible. Maybe that's what's going to happen. But here's something that makes a bit more sense is, let's get rid of you and let's take instead these, oops, these two trend lines. Where are they? There they are. Not this one. No, wait, this one. Okay. So what it was basically is you take this point and you touch it with this point and you touch it. These are major inflections. And then you take this touch point here, this B, and then fine, you want to take this B here. So then that's what you end up with. And the whole C basically happens outside of the B to B. Okay, you could do that, but what if we treat this touch point as our B, leave this as, whoops, where are we? Leave this as a C, very strong, okay? And then we start the next move here. This can be our, sorry, we don't start the next move there, because then we have our X wave, and we start here, our next move at the X wave. Okay, we make our A here, our B is here, and our C is down here. And this basically is the reason the B is not here is because it's not a major inflection point, whereas this would be. Does that make sense? And it allows all the action to stay inside. So then we get our A, our B, and our C, and it allows us some to come here and say, okay, A, B, and it's still a good C wave, good impulse, and it can end probably right here. It could probably end here, whatever, and fall within what we need. Look, it's really okay. Looking at that, yeah, that makes sense. That makes a lot of sense. So I could live with that too. Either way, no big deal. But you still get a nice, normal zigzag. It's not right on the bang on the numbers, but it allows a good one. This one is pretty bang on the numbers when it comes to the extension. So there you have it. The C wave extending the A wave. I mean, relating to the A wave. All right, so there you go. There is a theory for a double zigzag on Pirate Chain saying that we're ending it here. So what does that mean? Well, I think we can retrace this whole move in the same degree. We can retrace it. Now, 61.8% would be this 11,000 level, it would be this level here. So I think it's definitely fair to say 7,000 is in game, is fair and in game. I'm going to get rid of this diagonal line. We're not going to play with the X over here. I think that, you know, 38.2 retracement at least here at 8,000 Satoshis. That just makes the most sense at this point. And then the stronger will get us to the 10,000 Satoshis level. And that's on a weekly time frame. A double zigzag, I don't know if it's going to retrace more than 61.8%. This is a strong non-standard move down. It's complex with an X wave on a weekly time frame. So that's fine, but it might mean then this is a very complex correction. This might mean this whole market cycle is over, starting from a new low, a higher low than the previous market cycle, which was very much accumulatory over a couple of years or whatever number of months. And then now all this distribution, but now the market, more market participants are holding it, as they say. Shout outs to Mitch Ray. And yeah, then what else? Then now we're maybe either done with this market cycle and going to go on to newer things, or this is part of a bigger deal where we've had like a 1 and now a 2. And after this, you know, bigger impulse, I should say, on a bigger time frame, on a weekly time frame, we're working into the 3. But because this is such a complex correction, then the 3 might be the extended and subdivided wave, where you get a really extended subdivided wave on a weekly basis. So that means longer term with ups and downs that are more individuated. So the degree will probably be bigger and expanding. So that's the sense I'm getting, is we're going to now get to a degree where we're expanding. And at some point, I wonder, and I do hope and do think that there's strong potential to reach to these previous highs. But what happens at that point, I don't know. Maybe Pirate Chain is going to be living in a bit of a box for a number of years. I don't know, but this is kind of where I'm at with this. And if it is going to be more than just accumulation, because like this market cycle is over, and now we accumulate to a bigger market cycle where this move actually ends up being just part of something bigger. Or the other option is we are now in a current impulse where it's going to get higher than the roughly 15, 16, 17,000 Satoshis level that was previously all-time highs on closing basis during the week. So for it to get there and beyond would be a current impulse that would be happening much sooner. And in that case, we'll see. But actually, I think my number one is probably we're going to have a bit of accumulation over the next number of years. You know, that's just the sense I'm getting. We'll build new channels of good value and stuff. This will probably be a great level of value over time, around the 10,000 Satoshis level. If we can do stuff like this and oscillate around that, I think that's great. Because this is against BTC, by the way, and we're going to expect some sort of bear market time. And so that makes sense to me on that level. I don't think that we're getting like up, down, up, down, up, and then long down. I don't think that's what's happening right now. And I think that's like that for many alts, is like it's early on in the altcoin and BTC multi-chain world, right? Where people are actually using the crypto. So I get the sense that we're going to get some good sideways action here. We'll see. But yeah, so because in the next degree, in this same degree, where we have this impulse up and this move down, we're going to have another impulse up. But to where and what's going to happen, maybe it's not going to be an impulse up, it might be a corrective move up before another corrective move down. We'll see. This whole thing might just be a whole bunch of corrective moves now, where we're having like threes, you know, that kind of idea. that are made up of impulses and corrections along the way, just like this is made up with 5, 3, and 5. But yeah, that's the idea. Okay, so here we are on Pirate Chain. That's kind of idea with levels as well. This is a weekly time frame. The other video I did yesterday has about the monthly time frame. So that's a pretty cool one. I'm not going to go back into that. This shapes up more like a zigzag. We get some support on the monthly Bollinger Band, 20 month moving average, that type of thing. So let's use time now. Let's use a bit of a time analysis to get a sense of. Oh, actually, but before we do that, I did want to show here that there already was time analysis that we've done on Pirate Chain. So if you want to go look back at some of that time analysis, go ahead. But here they are. I'm so glad I saved them in the form of these vertical lines. So let's take a look at them, all right? Hey, and if you were there, and if you're watching right now, congratulations on you. And if you were there when we were drawing these vertical lines, congratulations. I'm so happy to have you around and listening and enjoying. I hope this is of value to you and worth your while. Obviously it is, because you're here. Okay, so unless someone's forcing you, in which case I'm really, like, it's kind of weird that my shit would be torture, but I guess for some people it probably is. Okay, vertical line number 1 that we have here, where are you? Boom, you're at the 6th of December. So, because yeah, we're wondering like, where are things gonna happen? Okay, where was the other one? I started here, so I'm like, okay, oh no, I didn't. So here's one, 6th of December. And then the next one, 1st of November. So like, okay, cool. Imagine this one relating to the end of the whole move. That would be incredible. I don't remember what line that was, what number it was. So I have to go investigate it again. Then we have the 27th September. Wow, yeah, like, come on, I did not put these in there. Woo! I didn't, and to be honest and fair, I didn't even investigate them in relation to these ideas of, like, for example, the idea that, for example, this line here, November of 21, relates to potentially the ending of this move, and that this September 27 line relates to the inflection of this potential B wave. I mean, I don't know what other lines we ended up with that were deleted, but that doesn't really matter. We are doing this, we're looking at this, and I'm saying, okay, where's the next line? Vertical line is here. There we go. So interesting. So that's the end of the X wave potentially. And I mean, it looks like a lot of these are at the end. These lines are at the end. So I'm guessing here the 6th of December is going to be at the end of a bit of an up move. So maybe we are going to just challenge this 5,000 Satoshis level by 6th of December, and then we turn back down again. Very likely. So there's a good deal right there, your own pirates. Where are we? Let's say roughly 66.66% move, okay? Something like that. Well, no, from here we're like more like 50%. But anyway, all good. You want 50% more of that BCT? Anyway, on this financial advice, but I hope you're enjoying this and I hope it makes sense to you. And that would only be the beginning. I do think that the next part of it is going to be where the next part of it is going to be, so we might go up and then come back down, but that's going to be part of a bigger aspect where we are making the same degree as this correction, and we're going to be going in this direction. That's just got to be. After you go down, you go up. After you go up, you go down. But because we went down and it looks like we are confirming the end of something very significant, then there is a solid chance that we are now in the upward direction over time. What is the trajectory? I don't know. Remember, this is long-term. So, okay, wait, so let's play around a little bit. Let's play around a little bit. So we have these cool touch points. I love it. This is so cool. So what are we gonna do now? We are gonna take, I don't know. You know what? I'm coming back with another time-based video. Let's come back with another time-based video in this Pirate Chain series. I'm done for now. I hope you've enjoyed this. That's pretty cool. I'm very excited. I'm so excited for Pirate Chain and the whole Pirate Chain community and for the world with all of these amazing technologies that are coming out. And like I said before, those of you who are actively working on building and testing the atomic swap technology with Pirate Chain, you have my utmost respect and appreciation and gratitude. Anyway, I'm wishing everyone love, peace, and happiness. 11,000, 10,000 Satoshi Pirate Chain. Let's go. At least 8. Give me that 8. But anyway, first target is 5 by December. That's a fun call. Let's see what happens. All right, that's it for now. I am out of here. I'm going to close this down for now and log out. And I'm going to stop sharing and say goodbye. Wishing you again all that love, peace, and happiness. Take care.